Hello, it's Tuesday, October the 4th, 2011, and I'm Martin Smith with a daily outlook from MaxiForex. The US dollar strengthened against most of the major currencies as concern about Europe's debt crisis overshadowed higher than estimated US economic data. Treasury bonds rallied as the Federal Reserve bought longer-term debt. At the same time, ISM Manufacturing PMI came out 51.60 versus 50.50 forecast. This shows the economy is growing slowly but not going into recession. Wall Street closed negative as the NASDAQ fell by 3.29% and the Dow Jones declined by 2.36% due to high concern over the Greek debt crisis. Crude oil fell by 2.68%, the lowest level in more than a year, and closed at $76.20 a barrel. Gold rose by 1.90%, closing at $1,661 an ounce. Today, factory orders are expected to grow by 0.20% versus 2.40% previously. The euro fell to a 10-month low against the US dollar and to more than a decade low against the yen as risk aversion intensifies and stocks extend losses on Wall Street. In addition, the incoming European Central Bank President, Mario Draghi, said a lack of confidence may be among the reasons for lenders' funding problems. Trading below the resistance level of 134.80 will keep the momentum of the pair negative, but if the pair breaks above this, it may reach 140.60 again. Overall, the euro-dollar traded with a low of 131.62 and a high of 133.80. The British pound fell for a second day against the Greenback as traders judged a surprise expansion of UK manufacturing as insufficient to keep the Bank of England from providing further stimulus for the economy. The trend for the pair remains bearish if the pair maintains its resistance level of 157.30. But if it should break that resistance, it may reach 159.50 again. Overall, the pound dollar traded with a low of 154.20 and a high of 155.82. The US dollar fell against the yen after the Bank of Japan said today its quarterly Tankan index of sentiment increased to 2 in September from 9 in June. Technically, trading below 76.80 will keep the trend bearish and the pair may test support at 76.30. Today, no economic data is expected. The Canadian dollar fell the most since October 2008 as Europe's finance leaders prepared to weigh the risk of a Greek debt default. As a result, Canadian stocks fell, led by energy companies and banks. The trend for this pair will continue to be bullish if the pair maintains its support level of 103.50. Today, no economic data is expected. Well, that's it from me. Be sure to visit us at maxiforex.ru.